Welcome guys to a new video, and today we will try to basically dissect a few price levels and how to approach it so you can find the best price levels in the market and this way avoid many bad trades. All right, because many people just randomly join zones. Every little zone is a trading opportunity for them, and we really have to basically find the best price levels we can trade from. All right, and not that we have valid zones, that every zone is a valid zone to trade from. All right, so we could have lower probability zones and higher probability zones, and we want to be more than often on the higher probability ones. And there's a clean, direct way of how you can approach it and trade these higher probability zones and basically minimize your losses. All right, so if that's of your interest, leave a like, leave a comment, and subscribe as well, and maybe suggest us what type of videos you want us to do. All right, so what type of videos you are interested to show in the future. All right, so let's get started to the video. So what we can see here right now, this would be basically a classic wave down. All right, so let's say in our current prayer, in our analysis time frame, we are seeing here price just moving lower here cleanly. All right, so making lower lows and lower highs. Okay, and along the way we see that price basically has broken many structural points. All right, so since it has broken many structural points, people would say, all right, let's draw this zone, and this zone, and then basically they will trade every single one. All right, not even asking yourself if this move is overextended. All right, if this move is overextended, maybe you want to start looking for buy trades as this bearish trend is already over. You should be already positioned on the sell trade down. All right, but there could be a potential pullback to the continuation of that same move. So how do you approach that? Okay, and how do you basically look for the accumulation? Okay, how do you look for the point where the market is able to show a pullback? All right, so at this point you would see this is just a little movement here. All right, so eventually you can look for levels like this that have created minor structural points, have broken minor structural points. You can look at these levels for maybe some minor trades. All right, so you really look for trades for a short time period, because you know this level is very obvious. All right, the more obvious the level is, the more easier it gets manipulated. Number one. Number two as well, if it's just a little move, a little blip in the whole market movement, then basically you want to be cautious at that level. So let's say we don't trade it. Okay, but which levels can we trade? All right, so if we see bigger movements coming from one level, okay, one zone, then we can start approaching it and looking for potential trades there. All right, but what you can do, okay, is basically use your Fibonacci. All right, you can draw your Fibonacci on the whole impulsive movement and see if some levels, some zones align with your retracement levels. All right, so the 0.5, 0.618, 0.786, so you can look for potential retracements at those levels. All right, so this would be all valid, much better trades, valid trades on such a move. All right, so you want to keep that in mind before you start trading supply and demand, and you look for continuous zones created in the supply in a seller's move, so bearish move, or demand areas in a bullish move. All right, so it's the same thing upside down. All right, so just apply it. But most of the times it doesn't happen all the time. All right, so it doesn't mean that it has to happen all the time. It's not these minor levels, okay, that are created along the move, okay, along the move down, that are the best areas to trade from. Not really. All right, because if you really analyze this whole movement right here, we know eventually that most of the sellers or most of the big players sold around at the origin or at the top of the beginning of the whole movement down. And if that's the case, then eventually we want to look for trades at that same area again. This doesn't mean that before we don't look for any trades. We are just basically treating them different and knowing eventually the probability of them. But we know if price should come all the way up here, all right? So let us delete all these levels. So if price should come all the way up here, this is the best level where we could get some nice sell trades. All right, and if you see this in the market, all right, and if you see price basically returning to the point of origin where the whole move started to break new market structure points, changing the character in the market, this is where you want to be very, very cautious and very, very aware to look for potential signs that the market is moving lower. And like said, since it's the best level, best key level in the market, this is where you get the highest risk to reward, because you really have a lot of room for potential profit. All right, so try to see this in the markets. Try to look this at maybe your analysis time frame. It doesn't matter which time frame it is, but if you take this in consideration and looking by really where the move started, where the impulsive move to the upside or downside started, then you can start getting much better trades, and this will be basically the best key levels in price in the market. All right, so I really hope you guys enjoyed this video. Let us know in the comments if you should need any more help. Let us know if you have any questions already. Comment them down, leave a like and subscribe so you keep up to date to your next content. All right, so have a good one.